our speaker for today. We have our contract or partial CFO company, C-Suite Support, and two people from there, Bob Fox and Paul Whitley, are going to get up and tell us about, I forgot the name of it now.
Employee retention credit.
Yes, employee retention credit. So if you haven't taken advantage of that, you're going to learn all about that today. And they've been an SAP for 2 years now. So, and I've been a customer of theirs for 5 years. So I've been real happy with the services they provided. So without any, you talk to me more, Paul, I'll let you take it from here.
All right, thank you. Well, today we're going to talk about how you potentially can get money back. Many of the companies that do PPP1 is going to be eligible for this, and virtually 95% of you that took PPP2 is going to be eligible. So that's something you want to be aware of and how to do. We're going to talk about that briefly, but it's grant money. If you're eligible, you file, you receive, you don't have to pay it back. So that's the manna component of it here. So with that, C-Suite Support, you guys know who we are. Basically, we're a fractional CFO group that comes in to try to help you with your financial reporting, your banking relationships, getting your money, getting whatever you need. I've got some companies that I'm bringing in fractional HR people to resolve different kind of problems. We have a group with Bob, Tabor, and others in that group. There's about 340 in my network group that is comprised, at least half of that group is fractional CXOs. We come in from your director standpoint, shadow CEO, CHRO, COO, CMO, etc. So if you have needs, you want to drive something, then we have those kind of needs if they're not available through the SAP group of entrepreneur organization. So don't need to go through that. One of the, this one I think all of you know. I want to give credit to Ryan Hill. Ryan helped earlier with some brief conversations in the ERC, and I'm using some of that material as well as I just want to bring in the forefront from the standpoint that I've taken now 7 companies over to Whitley Penn from their companies that were doing it, and was able to do that and actually save money in most cases, but took them to 340 CPA unit to take care of them. So there's service and backup service.
Hey, Paul.
Yes, sir.
Can you come into the mic?
Okay. I'm loud to me. I didn't want to go.
You go close to the bank.
All right, appreciate that. All right, start all over. I'll start all over. Okay, as I said earlier, ERC is a refundable payroll tax credit that you don't have to pay back. Okay, the program will be active through the end of 2021. When we had the meeting here with Whitley Penn, that part of the bill had not been passed. So in the original discussions we had, you had at least the first and second quarter of this year. That's now been revised to where it's valid all year long. So while many of you may not qualify for PPP1, do not close your ears, because PPP2 can still happen, and it's on a back order basis. So if something happens with your company, something adverse, whatever the reason, you may be eligible. It's going to be a very positive eligible. Okay. The other thing that changed is originally you couldn't do both. You couldn't do the ERC for 2020 and do the PPP. That's changed. So you can go back and do it. So you're potentially eligible for both of them if you were affected by the COVID situation. Amount you're eligible to receive for 2020. The maximum you're going to be able to receive is $5,000 per employee. So if you have 10 employees, potentially $50,000, grant-free money, total bank, it's yours. Okay? And I'll make this presentation available to everybody. That's one of the things that, from C-Suite, we don't charge you for extra stuff. All right? Don't be talking about spreadsheets and things of that nature. I want to help. If you want us to do something, then you talk to us about it. For 2021, here's the reason you need to keep your ears open. For every quarter you qualify in 2021, you are eligible for $7,000 per employee. So someone like Bob McCarthy back here that may have 30 or 40 employees in that situation, that starts turning into $200,000, $300,000 per quarter. Well, listen. So this is very important. When you're doing this calculation, I'm sorry, I'm going to get some water. But let me just, I don't know. All right. When you're doing these calculations, payroll is your primary, but everything you pay for your payroll, health care, state taxes, 401k, participation, things of that nature, anything that you pay for your employees is eligible to be in this calculation. So that's important when you're doing the steps we're going to talk about later. There's 3 periods of review. 2020, the critical piece here, you had to have 1 quarter in 2020 that you were down, your revenue was reduced by 50%. That's a pretty steep one, and that's what will knock out probably half to 2/3 of you on PPP1. But there are many in here. If you're a restaurant or someone like Lisa where you got this kicked by COVID, you're going to qualify. The next step of that is that if you qualify for 1 period, you qualify for the next periods until you hit the 80% rule. We'll talk about that in a minute too. 2021, here's where the major change is. It's not 50%, it's 20%. First quarter, to qualify, you got to be down 20% of your gross receipts when you're comparing 21 to 19. We'll get into another little kicker in a minute. The second period of the year, you're going to be similar again, but it could be $7,000 per employee per quarter, or $28,000 per employee for the year. So if you were kicked by this thing and your revenue is down, where that's continuing to be down from 19 or the previous quarter, we'll come to that in a minute, you may be eligible or would be eligible for this $7,000 per quarter. Okay, so you take someone that's in construction. That's why I mentioned Bob, because he's in construction. Last year was a bad year for construction. This year is great. But he's going to be able to go against those prior numbers. You got 30, 40 employees, 50 employees, start taking that times $28,000. You won't pay attention. Okay, simple things, but these questions are going to come around to me all throughout the period here. Must be in trade or business with employees. Also, employer can be claimed. Self-employed individuals are not eligible for the credit based upon their own self-employment. They have to have employees. So one-man band, one-man shop, something of that nature where they're self-employed, not going to be eligible. Tax-exempt organizations, federal government, we don't have any of that here. Okay, shutdown, 2 different things here. Shutdown must be an appropriate government authority that imposes restrictions, or must limit commerce, travel, and group meetings. Again, we're going back to Denmark back here where they have group meetings. Second qualification, must affect employees' operations, typical operations. So if you send employees home and they still do the job, that's not going to qualify. If you had shut down for whatever reason, then that qualifies. Those are simple things. Most of you are not going to fall in there, but there will be some. All right, definition of eligible employer, 2020. Fully or partially suspended operations to the government, or you had gross receipts in any quarter less than 50%. That's the key that'll override the first one. Employees eligible to claim with declining gross receipts. Okay, this is compared back to 2019. And it will continue with the next aspect here that if you qualified in quarter 2, even if you didn't have 50% in quarter 3, you only had a 20% reduction, you're going to qualify. If you had a 20% reduction in quarter 4, you're going to qualify. So you don't have to hit that 50 percentile thing except one time, and then the 80 is what follows after that.
So you're saying you had to have hit it in 2020, the 50% rule once.
1 quarter,
Then you can qualify for that 20% in that following year.
The following quarter. Okay, 2021. I I'm going to go through this, and here's something you want to listen to because it's kind of critical pieces. First one we've already talked about. Gross receipts 2021 is down 20% from 2019. So you're going 2021 versus 2019. That's step one. Step two, businesses can also elect to test by looking at the immediate preceding quarter and compare that quarter to the corresponding quarter in 2019. So while a lot of you may not hit the first one, probabilities you're going to hit the second. So again, if you qualify for PPP2, which means you had a 20% or more reduction in your revenue, you're going to qualify for some of this. I'm going to go through this kind of a situation. These items, it's going to be real boring to try to go through this. I'm going to use an example in a minute. But if you're looking at the numbers here, Q1 2019 was $400,000. Q2 was $195,000. You have a 48% reduction of 2020 versus 19. So, well, I said 52% reduction, you're only going to be 48, so you're going to qualify. Now, that puts you where you qualify the next quarters as long as you're 20% or more. So the next quarter, you're down 31%. By the next quarter, so you qualify. The next quarter, you're only down 14%, but because you qualified last quarter, you qualify again. All right? Now, here's a practical example. This is a real country. Quarter one, 2020 versus 19, they're only down 2%. Quarter two, they're down 51%. They qualify. Quarter three, they're only down 30%. They still qualify because they have not reached that 80% of or 20% reduction, so they qualify in the third quarter. Quarter four, they're down 24%. They still qualify for that year. Even if they'd only been down 2%, they would have qualified in that fourth quarter. Okay? And anything ringing the bell to your own, think about your own numbers. We'll talk about that in a minute. Eligible employer 2021 examples. It's a little bit different. Taking it through, I put on quarter four here for a reason. I can compare quarter one 2021 to 2019 or fourth quarter 2020. Okay, so that's why this is a little bit past into these other things. Quarter one qualifies because it is less than the 80th percentile level, so it qualifies. It would have also qualified against quarter four. That's why you're in the second quartile, the second column over here. Okay? Right here in the second column, this is Q1 versus Q4 of 2020. So I qualified here, but I also qualified here because I'm in that 20% down factor. I only had 80% of the sales of that previous quarter. So it's a little tricky, but it's a good check. Either one of them allows you to be qualified. Then you get 2021 Q2 versus Q1 or Q1 of 2019 or Q1 of 2021. So it continues to be, is it less than this one or is it less than that one? If it's less than either one of them, you qualify.
Then again, it's that previous 50% that hadn't received this, correct?
Well, the 50% is only for 2020. When you get to 2021, no.
So it's erases and goes to
The 50% is gone.
2019 versus
That's right.
2021, 20% gives you to requalify.
Right.
That's
Okay. So that's yes.
I have one question. So, let's say I kept my whole staff on, even though we really didn't have work, but one person did leave in October. Would I still would I still get money for that one person because we just brought them back?
Only for that quarter, only for the portion that they.
But they could, but they'd still get credit for that.
So you'll get credit for the earnings factor, not whether they're on or off payroll.
Good.
So if they're gone, but you pay them payroll enough to where they qualify for for some portion up to last year, 2,500, for the period for the quarter, then that's good. So, yeah, terminated employees has nothing to do with this, has total everything to do with payroll pay. Here's an example of what we just talked about. That is, looking at quarter one, I'm looking at against 2019, looking at the previous quarter. In this example, against 2019, they weren't down 20%. So in that test, they failed. But in the test against the previous quarter, they passed. So they will still be eligible. Next quarter, they're down against 2019. They pass. Next quarter, down against 2019, they pass. Fourth quarter, projected, they're not down 20%. They are down 24% against the previous. No, they're not. Okay, they're not going to qualify because they're not down sufficient amounts there in the fourth quarter. But in this particular case, if this was your company, you had 3 quarters that you qualified for $7,000 per employee earnings during that quarter. Take it over.
Okay.
I'm going to use my phone.
I don't have as loud a voice as Paul does, so I definitely need this. Can you tell that this is a government program with all the different roles and caveats and things like that? It's like, oh my goodness. But basically, in the steps to calculate, you really got to lay out your payroll for each month and quarter, just lay it out that way. You come up with the calculation. Again, if you're doing PPP loans amounts, you got to look at that and see what amounts, what months would actually qualify for that. And then when you're looking at that, then basically you want to look at the other items within payroll that you could include, like health insurance and all the different compensation levels that you're paying your employees. So you want to include all of that as well. You want to maximize the non-labor PPP spend for forgiveness, and as well as allocate labor spend between the employee retention credit and PPP. So there's a number of decision points.
Yeah, when you say maximize non-labor PPP spend, you mean when calculating the forgiveness application. It's not necessarily, it's not a runtime decision or an operating decision. It's more of a retroactive decision when you're compiling the forgiveness application.
Yes, and basically you would look at all the different categories that they are allowing you to include in compensation levels, and make sure we're picking up everything for that. So the definition of compensation is not our normal definition of compensation. We think about it as just wages, but it includes insurance, includes other benefits that are being paid out, as well as employee taxes that are being paid out as well. So it's just going through and making sure that you have sufficient inventory of that. Yes, sir.
So, if I understand this right, this is a credit per employee, right? That's each of these, and if the employee is fairly new, say they were hired in 2019 or they're hired in 2020, are they not applicable in 2021 if they were hired in 2020? Or do they have to be hired then?
You lost me another minute. Try one more time. Your example.
Okay.
They were hired when? I'm sorry. In 2019?
Okay, so, restated. If I have an employee that was hired, one of them started in 2019 toward the end of it, and one started toward the end of 2020.
Yeah.
Now it's 2021, and the revenues are down. Am I eligible for that retained?
Yeah, it's the compensation level that you're paying. It's the salaries and wages and benefits that you're paying, not necessarily the head count. Other than when once you get past, if you have W-2 employees, in effect after that, you would be qualified for that.
Okay.
So it's at that level.
I see somebody dancing back there. All right, I'm going to take it from here because I have been doing some of these already. Both of the guys are coming up to speed on pulling all the data, so they're going to be doing some of these with us for anybody that wants us to do this. If you have time at the conclusion, or if we get through here quickly, I'm going to show you some live examples of what we do to get this done. But starting from the top here, I'm looking at the total compensation, maybe a little hard to read from back there, but total compensation by quarter, by person. Note that this, we're literally talking that we're running payroll reports. We're getting by person, by quarter, total comp plus total benefits that are paid to this person. So that's a little bit of a work effort that you need to do and work with your payroll provider to get these things for you. The second thing that we do is going into the compensation used for PPP. Now, right here, I'm going to make, this is very important. We're going to spread this over 24 weeks, 168 days. So we're coming back to you. Many of you filed for your PPP forgiveness. You have enough payroll for that 24 weeks just to cover that, so that's all you showed in many cases to get your forgiveness. You're allowed to go back and pick up the things that would have qualified for that forgiveness here. And this is where it's kind of important. You got payroll for 24 weeks. Now I'm talking strictly PPP now. You got payroll for 24 weeks. You got rents, utilities, you got all of the qualifying things that you can take. We're going to do a calculation to figure out how much of that is payroll to how much of that is this extraordinary stuff. Half the lock payroll is 60%, so it cannot go more or any less than 60%. I can go up to 40% of your PPP was applied to non-payroll items. That's important because it's going to come into the next calculation. So now we come into that right here, you got your PPP. Now for general purposes, let's say you got a $100,000 loan. 40% of that was these extraneous things, rents and utilities and all that other sort of good stuff. 60,000 was actual PPP forgiven or payroll. If that be the case, the bottom line number here would have to be $60,000. But if you were in that level, you're going to have a lot more people and you're going to have a lot more payroll to start with that. So we have to apply it against the appropriate period. That calculation has to be done as well. And again, in just a little bit, I'll show you a live example of how that works. The next step of this thing is we had this total compensation. We minus out PPP. We came back down to this calculation for ERC. Now, each employee, by employee, has a limitation that's going against it. In this particular case, it's $2,500 a quarter for 2020. It's $7,000 a quarter for, $7,000 a quarter for 2021. So that's rather important. Then it comes down to 50% of your eligible payroll. And at this point, whatever you have, it's going to come out to where you have $10,000 worth of payroll eligible. 70% of that is credit available. That's where you're going to get your $7,000 per employee. So it's going to be real numbers, not across the board summaries numbers. It is a deep dive of your information to do that. Is that simmering on anybody for questions? All right. Now, while some of this, it's just a lot of detail. Somebody needs to focus to get some detail. But when it comes into $100,000, how hard do you work all year long to get somebody to give you $100,000 put in your bank? Okay. That's what makes it worthwhile. Okay, claiming the credit. Go for it.
Here. Okay. Thank you. All right, to claim your credit, there's a special form that you would file on your tax return. It's 941X. And you can go back and do that not only for 2020, but for 2021 when you file your 2021 tax return. So that's an item that has to be filled out to claim the credit. And this, again, will include your federal income tax, withheld, your employee's share, Social Security, Medicare, all those various deductions that you're paying. And if the credit does exceed your payroll tax liability, then you have to file a form 7200 to claim the excess as a refund. Yes, sir.
Hey, Bob, can you just roll it forward and use it on future 940s? Or do you have to?
Yeah.
Well,
Sure.
I'm going to step in. Pardon me.
Go ahead.
Go ahead. you've only got the option of filing with the period. Now, with the period,
You've only got the option to file a what?
for the period in which it's actually earned or going to be forgiven.
Right, but you can also file retroactively, like I did this once and capture the past 4 or 5
Yes,
quarters, right?
that's what I was saying to you. You file a 941X, which gives you credit, which you can show that credit for going forward. Now, for 2021, those of you that are in this capacity of what we're doing, every quarter you file, meaning if you got your act together and get all this stuff pulled, you can take that credit when you pay for your second quarter taxes that's going to be coming up to be paid in July. So if you're in these situations, you want to move fairly quickly, and then you don't have to wait for that refund. Okay, I'm going to talk in a minute about what happens on that. But for the rest of this year, if you're doing this, or you have somebody doing these calculations for you, for the rest of this year that you qualify, you can actually take the credit on the current period, 941 being filed.
Yeah.
Okay.
But how far can you carry forward you get this current asset? Can you
Well,
carry it forward?
once you got the credit there, you can carry it forward just like an NOL. You can just take it until you got it all returned.
Okay.
Now, there is one other step that I'm going to tell you that they're going to ask you to do, and that is to file 7200. This is a form that files for a quick refund. You know, we're talking about the government, so let's define quick. Okay. So going back to your conversation, if you have more credit than you have more liability, this is where you would file for it, and this is where they theoretically will give you a quick refund. If you have credits out there, you should be able to apply this credit towards your future period.
So I'm just curious, there will be some people out there that didn't file for PPP1 and PPP2. Will they qualify for this too?
Well, if their business, well, yeah, if they lost
This
it,
qualifies, it doesn't matter of any of that.
it really doesn't. If they qualify for this, but if you know somebody that hadn't filed, we can still get a PPP2 in. So, they got more money coming. They got an EIDL, they opened that back up. They didn't get for any of you that don't know this, the EIDL opened back up. And if you were eligible for that first time, you're eligible to get it now. The second thing is, if you got an email saying, do you want more money? Answer the email and say yes.
Paul, on that, I got the email easily more than a month ago, and I replied yes, but I've never heard anything back. Is that common, or?
Yes, sir. I'm afraid that, coming back to the joke that we've been having throughout this session, we're dealing with the government.
So do
But
we,
yes,
but to be safe, is there a way?
absolutely follow it up. Reply back to the same place that you did, follow it up, keep it on the agenda in front of somebody. By no means going to tell you that it's going to be fast. All right? Any other questions towards how do you get your money? Okay, these two slides, and I'm going to send this out, so you don't have to make any real deal. This tells you what kind of a company was eligible in 20 and in 21. And then we're going to be talking in just a minute about a live example of what has been done for a company. One of the things, the C-suite plug, we do a lot of work for many companies that are in this room, as well as the EO. We would love to work with you. If you want us involved in your ERC, I've got companies that have done other work for me, particularly in the R&D tax credits. If you have any kind of research and development of any kind, it doesn't have to be just technology, we need to talk to see about getting tax credits. Those companies also do the CRC. Now, those companies, both of them charge 10% of the total value they get back to you. So if you're getting $200,000 back, you're going to charge $20,000. I can refer them to you, or I can say, if you want to do it, do your own, or if you want us to do it, we'll do it for a flat rate. So whatever that has to do, go forward. All right? Now, from there, I'm going to show you the slide example that I was talking about. And okay, this is the summary page. Gone in here, and can anybody see? Can anybody see that back there? I need to bring that up. let's get the 2%. Okay? This is the summary page where we've done calculations to bring this into totals of what we've just been talking about. This is coming from your payroll company, and I want to talk about that in a minute, which comes into cycles, which comes into calculations. Every employee, total payroll back order, total payroll cost back order, formula check going against what are you eligible for to bring that into the front page. So that same thing happens for 20, same thing happens for 2021 to bring this together. Then we do this calculation that I mentioned earlier, where we're bringing that in, and these numbers make no sense unless you're actually looking at the form. But then we bring it into this kind of form that we just looked at earlier to pull these numbers. So this is, from my standpoint, to get all of the data is about 8 hours worth of work. And that 8 hours comes from, I get the first payroll information from you, then I have to go back to your payroll company or your 941s, and then pull that data, create these worksheets, pull them in together, prepare the 941Xs for you, and prepare the 7200s for you to file if you don't have enough credit there. So that's one of the things. Here's the next piece. If you got a PO, or if you have a PO, they cannot give you your 941s. So you're going to have to go through either the company to get their worksheet of how they're going to want it filed for them, or to download your summaries by quarter from those companies to pull that information to create this. Otherwise, if you got your 941s either from your payroll company or internal, if you do it yourself, the 941s is the source of this information by quarter if you have it that way. And that's the best way to do it. And that's the starting point for the payroll. The starting point for PPP is your filing documents you did for PPP. The next step is going to be a little bit of homework for you. And it goes back to the fact that in many cases, because of the 24 weeks, the PPP was filed forgiveness against payroll only. So many of the companies did not keep up with or pay or file all of those rent payments, utility payments, and things of that nature. Now it becomes important because it's almost dollar for dollar benefit to go back and get those things. So that's now us going back to you, pulling that data, pulling it into a spreadsheet, putting that against the actual PPP to figure out that line that we talked about earlier that came into right here of the application of the PPP. Because I mean, if you got that 100,000, I'm going to do a calculation of 60% of that went to payroll. That 60% has to be allocated here to come off of your actual payroll to make that calculation. So it is, unless you're an accountant or have a strong accounting force on hand, there is some complications there. But for a smaller company, it's not that big a deal. You got 3 or 4 or 5 employees, this is something a good accountant can pull together and process. Now, did that just make it as muddy as it could be? There's got to be questions.
Yeah. So, big question. Can I just send you all our stuff and you do this and we pay you to do it?
Yes, sir. Yes, sir. And I'm doing it for quite a few companies now.
Okay, so how does that, how would we do that?
Well, first, just get a hold of me. I assume everyone here knows how to get a hold of me. Bob, Tabor, the 3 of us are working on this so that we can get it all done and get it timely done. So one of the 3 of us will finish it out. I will be the contact person, the overseer of making sure that's done, and then we can individually contract with you to do it. I would think for us to do that as a norm, I'm talking about 8 hours being assigned to it, that's a $1,600 cost versus what I talked about a minute ago. If you had $100,000 coming back, that's a $10,000 cost. We're just vibrating, we're not taking a percentage of your return.
You know, I'm just going to do a shout out to C-Suite. So Paul was on vacation and I got a call, and he knows that my business and Laura's business have probably been hit some of the hardest in PO. So while he's on vacation, he called and he goes, what would you say if I could maybe put $140,000 in your pocket? But I'm on retainer with him, and I didn't even know it was a possibility. So he is, I could say, he has saved me during this entire
you're very welcome, very welcome. I also had phone calls from other EO members that something happened, help me, and I'm on the beach talking to them. I was enjoying that meeting a lot when we were taking care of things, but I'm not the only one of the team. That's one of the nice things. There are four of us entirely. Jeff couldn't be here today. He had to be in court today on one of his slides. So we do have the backup tower to take care of these things. It's going to require us getting data from you, and just pretty well outlined it. So the hardest work you got to do is get me the payroll information and get me the non-payroll items for your PPP that you may or may not have kept up with during your PPP-1 pandemic or this PPP-2. We'll be keeping up with it every quarter. That's your homework that you have to do, because that's what we need, because we obviously don't have that unless we're already taking care of all the financial work.
Are you going to tell us how much this person got back?
Well, for 2020, we have filed, I'm sorry, that's not correct. For 2020 and the first 2 quarters of this year, we're planning to file for $340,000. Real money.
I hope that's mine.
I told you we needed to get together next week. You were definitely because of that. You got manna from heaven, just like the last couple of times. You got some manna from heaven coming your way. You must take care of that. Any other questions or directions that?
Are you going to share the slides, Paul?
I'm sorry?
Are you going to share the slides?
I am. I'm going to share the slides. I can probably redact this spreadsheet, or not probably, I will redact this spreadsheet that it already is, company name's not on there, for you to use as a guideline to pull these numbers together. If you want to do it yourself, fine. If you get into the muck and the mire and you say, oh, holy crap, I got to run my company, I'll let somebody else do this, then please contact us. Yes, sir.
Paul, does the slide deck include a checklist of what we need to pull together to send to you?
Opening and summary, if you engage us, I'm going to send you a complete checklist. We will send you a complete checklist for you to check off. That'd be too much. I think there's too much information in here now, but between that and the spreadsheets, there's quite a lot to assume, but yes. Anybody else? Tommy's up here trying to grab on that. Mike?
Thank you, guys. Thank you. Great job. Thank y'all for being here. And I know we spent most of the time talking about this employee reimbursement program. I would also encourage you to check with them about your R&D credits, because I knew about R&D credits from a long time ago, but I did not understand the definition of what the government said was R&D. And they helped us go back and look at 4 years worth of credits, and we realized that we had a significant win for us. So don't forget about that as well. So thank you all again, and